Hello, 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 hello. How is everyone doing today? So, it's been a while since we've done a market update. I wanted to just keep you posted on some technical scans and indicators that we've been doing. So let's grab a sip of water. I should have grabbed it before. I'm definitely not. I've been running myself thin lately. I've been working really hard to make sure our members have all the tools necessary to take advantage of this market. So I've been really worn out. But in this video, what I wanted to do is I wanted us to talk about a market update. We're going to do some technical analysis by looking at support and resistance lines. The market did really good today, and this is in essence part of that bear market rally that I was talking about earlier during a video that we did a couple days ago or a week ago to essentially give you guys necessary tools. So I just honestly forgot that I didn't post this on Reddit. So if someone can help me post this on Reddit and StockTwits, that'd be really nice. In fact, let's get to doing this right now. Might as well. Let's see here. I want to make sure those guys are up to date. I feel bad because a lot of the information, there's some good information on there, but a lot of it, it's cleaned up over the past months, but it was just really bad. So let's try to help them out. Let's see here.
Clover Health CLOV STOCK market update.
Market update. Done. All right. So if someone can take care of StockTwits, that'd be really nice. Okay. So back to what we're talking about here. So I want us to go in and take a look at this here. So, this could definitely be one of those bear market rallies. We possibly, definitely, maybe not have hit a bottom yet. And this could definitely be a bear market rally. But the thing is, you have to understand is that each stock is different. Each stock has been beat down, right? Differently. And definitely, Clover has been that one. Clover has been treated like the scums of all the scums, when in reality, it's a real business. It's working hard and it's on its pathway to profitability. So just I wanted to make sure we're aware of that. So let me just go ahead and switch on to this guy here. So let's push this here. Oops. Sorry, guys. All right. So right now, what's interesting that we have here is that dumb money has started to come in. But yesterday, if you checked the scans, smart money and dumb money were actually buying at the same time. That's pretty rare, right? But right now, smart money is cooling down and dumb money is coming in. Now, usually when dumb money comes in, stocks go up, right? So normally for me being a contrarian type thinker, if I was to invest in a market, my dollar cost averaging, I alter it in terms of my indicators. So I do invest every certain amount of time in the market on my high conviction stocks, but I allocate a certain percentage when we're at max fear, when we're at when the indicator's saying dumb money and a whole lot of contrarian indicators are ringing a bell. I tend to dollar cost average a little bit more heavily weighted. If our intrinsic value calculation DCF model says it's really undervalued, then we go in and do it even more. And as the stock continues to rise, we start allocating different portions of stocks with high convictions to essentially, it's very complicated. It's very simple, but it's kind of complex to explain. But that's kind of how I was doing it. So in short, I did not buy today. I would not buy today, right? Why am I going to buy on a 7% up day or whatever Clove was today? Last time I checked, it was 7%, 8%, right? So just know that, right? Even though it's still cheap, right? Kind of have that because I want you to carry that mentality once we do get into that bull market, whenever that's going to be, right? And I appreciate if you can smash that like button. It really does help with the YouTube algorithm. It picks up the videos. I don't really say it a lot, but it really does help. I should. Okay. So let's go on here. So today we hit a signal. we went from oversold to overbought, and we went above the 10-day moving average. Now, I'm sure if you're on Twitter, you probably saw a lot of people post their little diagrams with their technical analysis lines, and you saw them, this is what that is. It's just a little bit more sophisticated way of looking at it, and it's easier to ascertain. So we hit above the 10-day. So if we were to take that and put that on the side, we're going to revisit that. If we look at growth versus value, growth hit a 52-week low not too long ago. Okay. Remember, everyone was like selling and it's been crazy. Well, now it's been rebounding. And the question is it going to continue on this trend? Well, to answer this question, we have to zoom out from 1928 to 2022. The numbers above the blue are value stocks outperforming. Okay. The bottom numbers, or the lines in black, are growth stocks outperforming. Now, this line here is a median line. It's about 10%. Whenever we hit that, we tend to have a huge drawdown, right? It's almost like a peak for value. Okay. Now, it doesn't mean that we're about to shift to growth immediately. It's something to keep in mind. I personally, right now, would not be going in value, because when a recession hits, value is not going to be the one to go into, right? It depends on some criteria on what that stock is. Okay. So if you were to analyze the growth and value ratio after the value outperforms by 10%, what you can see is that it actually is not good. So it doesn't, so even when we hit above this 10% mark, we've taken all that data. And what this tells us is that we're negative still for growth all the way. Now, the probabilities of this returning is not as possible. We could switch. But again, it's something that you should definitely consider, because whenever we got these signals, growth continued to still slow down and drop lower. Well, guess what? We got the signal, meaning that we could drop even more lower for growth. Now, I tend to agree with this, because if you look at Apple, it's definitely dropped. I remember when I posted my price target a couple months ago, our members were like, why? Apple's doing amazing. I'm like, exactly. Well, it's overvalued. Now things are starting to calm down. Netflix is going down. All these things, right? They're starting to all calm down. But the problem is, if you look at the PE ratios, large caps have still, some distance to travel down, while small caps have gotten to a level of 2008. In fact, if they even go lower, it will be worse than 2008. So there's almost like a psychological floor in that region. Now, what analysts, I think, are not calculating is that, and they're starting to calculate it now, but they're late on the ball here, is that Microsoft decreased their projections for earnings. Now, if we remember, all the money is being sucked out of the economy now by the Federal Reserve due to monetary tightening. When we get to this monetary tightening, what ends up happening is that people don't spend money. There's a wealth effect. You look at your portfolios, you're at least inclined to spend money. There's also all that trickles down to an economic you spend less, builds up inventories, which causes deflationary pressures, just as, if you look at Target, Walmart. But then also people stop spending, so then earnings starts to take a hit. And then earnings needs to be contracted. So you see how it's all like connected? So I think we still have some room to go down. But again, I repeat, this is why it's important to look at the intrinsic value calculations and calculate price targets to see maybe your stock has already been beat down more than what it needs to, right? So keep that into perspective. Now, these are the S&P 500 percentages, 10-day moving average stress. So remember how I told you a couple weeks ago, or a week ago, 2 weeks ago, I said that we're about to experience a short-term rally, a bear market rally. Well, we're experiencing it. This is a short-term. Now, how many days this will happen? Well, let's go ahead and take a look. So if you look at this, we're expected, it's going to, in the 2-month mark, we're expecting a pretty strong return for a short-term um, bear market rally. However, if you look at the standard deviation and the present positive, you can see that it starts to dwindle down. The probabilities dwindle down, and then they peak at 2 months, and they go down after the 3 to 6 months mark, and then they go back up after a year. Definitely, a year is 12 to 18 months, 20 months. In fact, Chamath Palihapitiya went out and even said 36 months, which I think is a little extra bearish. But if you look at those, that's kind of the ideal situation. I think July, August is going to be great, and then September might be horrible from what this is saying, right before the midterm elections. Okay. But if you look at the days, and again, we were able to track this from 1928 to 2022, we got a signal. And if you look at the days, all the gains that we just got today, is a probability that they could be digested back. And you people that are day traders, they're like, yeah, of course, that's what's been happening. But then if you go on afterwards, the probabilities of then from these signals, then those digestions come back as returns, which is why it's important. I use these because I'm an advanced day trader. I don't have time anymore. I've turned into a long-term investor, but I like to use these stats to kind of fight the algorithmic trading. And we have some really high-tech things on our Discord that allows us to use artificial intelligence technology to help offset the barriers. Now, if you look at the NASDAQ 100, the NASDAQ is from after the 10-day. It actually does really well. In fact, the 1 month, because it has been beat down like crazy, as you can see here. We're looking at a 3.9% return with a 77% positive rate. Again, it does go down a little bit, but then peaks back up after a year. All right. So now let's go ahead and let's talk about some, the optimism index for a lot of these different types of ETFs embedded inside of the S&P, right? So if you look at financials, it's been pretty good. Housing, pretty good, right? We are seeing, and everyone's eyeing energy, right? Energy is a big one because energy has been definitely beaten down. But I do want you to take a look at healthcare. Remember I told you healthcare and technology? Look at that, XLV. Look at that. You see healthcare's gains? If you look at healthcare, it's the biggest one, second to that of REITs, right? Okay. So, and if you don't believe me, if you don't believe me, let's go to our website here and we can go ahead and graph the sector rotations. And what we see here, if you zoom in and take a look at, this is energy, right? It shows you by hovering down. This is directly from the All Stock Trades website. Energy has been falling, but if you look up the two things that are leading, what is that? Healthcare and what? Technology. I've been saying this for the past 3 months. Healthcare and technology. I repeat again. Healthcare and technology. Okay. I think that's enough repeating. Okay. So I'm giving myself a headache. All right. So if we go to the 120-day to kind of give a big macro, we could have seen that which is why I've been recommending to the intrinsic value calculation, sector rotation analysis, and we recommended ExxonMobil as a buy and a couple of other gas stocks, and we made a lot of money in our Discord group. So if you look at it right now, this could rebound. We could get another rebound because we are headed to the summer months. But as you can see, we are starting to make a shift. If you look at the 30 days, we are shifting. A lot of things are happening right now. We are shifting, right? Healthcare used to be near the bottom. Now it's at the top. Okay. All right. So I hope that was good right there. Now, again, just as a side deviation, please sign up to Al Stock Trades' Moomoo's collaboration. You'll get 10 free stocks. And if you deposit $100, you'll be also entered in our own raffle, which will get you a year supply of our stock alerts. So speaking of the devil, let's go ahead and look up some projections for Clover. So this is directly from our private Discord. This is called a Monte Carlo projection. It shows you the future in 30 days by using machine learning. So what we're seeing right now is we are seeing an inversion, and the bull case and the bear case are started to invert slightly also on the base case, signaling that we are expected to see a future bear market rally. Okay. Let's go ahead and look at the estimates here. Let's kind of scan through Clove. So we already know the revenue estimates are going to go up. Not bad. Let's go ahead and take a look at some indicators. We are above the 100 MA, the 200 MA, the 220 MA, and the 50 MA. This is a buy. We are in a strong downward trend. There is a trend line resistance, but it's definitely based off of these moving averages. We're looking pretty good. Now let's take a look at unusual flow. Let me zoom in here so you guys can see. All right. So let's look at unusual flow. There's no unusual flow for Clover. Let's see if there's any big flows. Let me zoom in here so you can see. Is that better for you guys? Just want to make sure you guys can see. About 6 months, we got about 31% institutional increase. Now, institutions have been selling some of them, but that's just reallocation of portfolio. They haven't closed all positions. Okay. They're trying to prep and weather the storm. Now, if you look at we already looked at that. Let's look at some Twitter chatter, see what's going on in the world of Twitter. This is directly from our Discord. Any Clove? No Clove talk, but definitely Tesla, Apple, Amazon, QQ, AMC. How about Wall Street bets? Same thing. Hood, there's a rumor that FTX may be bought out by Hood. Or, I'm sorry, Hood. FTX could buy out Hood. I think I said that correctly. Now, if you look at the resistance lines here, so this is very important, so you should probably write this down. So we've been definitely having some very strong support near the $2.22. Definitely some mega V-shape buys at $2.06. The question is, can we hold 235? And if we can, the next level would be $2.54. Okay. And right now, if we were to look at Clove, we're at $2.41. So all eyes are going to be on the $2.35. But, let's go in and take a look at, and I'm going to print them right now so we can just click on them. Let's look at the hour. Let's look at the day. And let's look at the week. All right. And again, if you want access to all this, it's literally as low as $10 a month. And you can find it in the link down below at all stock alerts. And for easy navigation, we can put it all here for you guys. So you can see here. Okay. All right. So going to the hour, again, we can see that it's slowly tricking back up. The next level of resistance is in the $2.70 region. Then after that, 307 and 365. Once we pass these, these kind of these bottlenecks, we're definitely going to do good. A big strong one is that 278, then that 374. Once we pass that 374, guys, we're going to be flying high. It's going to be it's going to be a big jump, right? We're going to reverse November's share dilution fall. I think they might dilute during this I think they might dilute here. They might dilute around this area, but we'll see. Again, if you look at the week, once we do ascend up to that 3, there is a medium short-term level of resistance at 419. If we do pass that, then we're looking pretty good. Well, now let's go ahead. Let's look at the dark pool levels. I want to make sure I give you guys all of it, So let's see if any dark pool. So people have been bought 2.91 million shares at $2.28. So there's a lot of dark pools coming in. If you look at the flow sum here, we don't have any flows. Let's look at the algo flow. Let's look at the 5-day. Yeah. So the algo is saying, you know what? it has turned negative, so it could go down based off of the algo. But again, there's not a lot of data, right? That's why the one didn't show. Now let me just make sure, double check the dark pool. Nope, no dark pool levels found. And let's see what can the AI give you any information? No, because it's predicting of the big changes that have happened in the market. So it'll take some time. Let's go ahead and answer some questions and then we'll hit it. So what's your take? There's my little princess in the back. What's your take on commodities, oil, natural gas, coal, uranium? I have been in these for a while, obviously. Close position that I've been slowly adding on. So my take on oil and natural gas is, by the time everyone's trying to buy it, it's done. In our long-term price targets, I've already initiated a sell off of many of the oil stocks that we have, such as the Barracliff Energy. It went up 73%. We initiated an order on February 11 on 453, and then ExxonMobil we went in. In fact, since we're here, I'm actually curious, how is our there's a nice one that I really enjoy. Where'd it go? It's the bank. Here it is. How is this doing? Okay, not bad, not bad. It hasn't really detrimentally fall. It's been holding up in the $20 region. Yeah, I definitely think this is a really good one too. It's one of those nice plays that has potential. Now, Nordstrom, when it fell down to hell, we initiated a buy rating back on January 14. It was trading in like the lower 20 region. How is it doing now? At 24. It's not bad at all. Yeah, it actually went up. I remember it went up near our price target, but it didn't fell because of the market. And now it's finally trickling back up. But yeah, we're definitely up on those positions. Yeah, it's very nice. Later on for the All Stock Alerts members, we're going to end up creating a PDF to kind of put these in different sectors, so you guys kind of have a nice analysis. But yeah, we have all of our price targets are here that we've been putting out. We're going to be updating them soon. Also, I want to show you guys something really cool. If you look up here, we're updating our BrainMachine for our members. Now we have let me show you here. Let me just mute the video. So the cool part about BrainMachine 3.0 is that now we have slash commands and we have buttons now. So you can press, literally, let's say you want to look up the intrinsic value calculation. You can essentially, let's say, click that or whatever, and you can go to that intrinsics, right? And we're going to fill them up with all of the commands we have from BrainMachine. But let's say you want to go backwards. You can hit it, and now you can go backwards directly from our Discord. So our software has been injected into Discord, which is why we can keep prices as low as $10 to make it available for all, right? Which I believe we're the cheapest in the market. All right. So let's see what's going on here. I have diversified a little. CLOV is my biggest position, but have started a position in SoFi. I want to take a position in EV, but I'm waiting for better price. Yeah, we'll definitely do a SoFi. We'll definitely do a SoFi. SoFi is growing rapidly. BrainMachine gave me a very big number on SoFi. I really want to make a video updating about that. Why Friday had 54 in volume but no price action. A lot of people were talking about that. It could be manipulation. It could be, who knows what it could be. But it doesn't really change my long-term thesis on the company, because I'm more focused on the fundamental. I have more focus on the fundamentals. So that's really it's really hiccups for me. They could offer, honestly, I'm happy it didn't go up. Again, guys, the longer a company stays this low, it doesn't really mean anything of the business. I mean, you saw United Healthcare; it was trading in pennies for I think 10 years. It's honestly great because the longer you have for a company that hasn't been discovered as valuable, the longer you have time to build out a strong position. Because people are going to be literally, they're going to want your shares so badly when they become profitable. We're lucky right now in that unprofitable stocks are looked at as a death plague, which is so good because you would not know this company will become profitable soon if you don't listen to the earnings report and stay updated. So that's a good moat that, in fact, one of our members pointed out that SVB that assigned a price target for Clover, if you look at their outstanding shares, they have it wrong by like 100 million shares. So definitely nice to be a retail investor because you have time and you don't have clients to please every 12 months. You can think longer and go out 10 years and discount back future cash flows. So I hope that was helpful. Definitely tired. I didn't want to make this video because I was really exhausted, but I think we have to because we want to keep you updated, and we wanted to do this for you guys. So we love each and every one of you. Just make sure you get your 10 free stocks. This will be ending soon. If you deposit $100, comment down your name. We'll enter you in our own raffle, and you'll have a chance to win a whole year's worth of our stock alerts. And yeah, that's all I have for you guys. And just FYI, all stock alerts will be increasing in prices in the near future. So people that do sign up, they are going to be grandfathered in. Okay, so we're gonna be doing some changes. We have been featured on a lot of these reputable news articles because our product works. So it is a privilege and honor, guys. And yeah, thank you so much. And that's all I have for you guys. I'll see you on the next one. Hopefully the video plays afterwards and doesn't skip. That's annoying, right? But StreamYards told me it's not going to happen. So fingers crossed.